All right, so for most of 2025, right, the focus was on the rotation trade. I talked about that a lot on the show. You can see where investors are looking for other things, and it wasn't just in the stock market, right? It was also maybe hopes that maybe bond yields would go lower. We'd have sort of a cyclical pump, right? So these middle cyclical sectors would do well. But the tide is beginning to turn, right? Growth is starting to really pick up right now. The NASDAQ 100 coming on strong. The Russell's starting to fall apart. This, of course, has a lot to do with yields. And the dollar, believe it or not, has been a really silent, stealthy 3-week slide. I want to bring it now to Kobeissi letter, their editor-in-chief, Adam Kobeissi. And Adam, I want to start with the growth stocks, right? So, everyone would say, hey, you got to own value. Growth was underperforming big time, but now it's beginning to turn up. When the year is over, when it's all said and done, when we look back, will growth or value outperform this year in your mind?
Look, I think right now the momentum is still kind of in these growth stocks. It kind of started to fizzle off a little bit as the markets became more uncertain, more volatility came. But now we're starting to see that pick up, and I think it's also interesting that a lot of the tech stocks are actually being bought right now.
So let me do that then, because again, Russell 100 versus the NASDAQ 100 versus the Russell 2000. Yep. Again, folks, the idea was that these small cap names would do really well. Particularly, we got 2 or 3 rate cuts, and we've been rooting for them anyway, right? We wanted them to do well. Coming into the year, Russell 100 underperformed. What I think is really great is not only is it now outperforming, but it feels like there's other names. It's just not that Mag 7 anymore.
Right. I think you're right. It is kind of spreading out a little bit. You see Palantir, you see some of these semi names running, but it also really is the Mag 7 still. And I mean, look at NVIDIA, for example. NVIDIA was up to like 150, 155 at its all-time high. It dropped back down to 110 with DeepSeek. It's quietly now pushing back to 140. It's around 138, 139. These Mag 7 names, Meta's up 20 straight sessions for the first time in history. That's 20 consecutive daily gains.
I call that the glance rally.
It's incredible. Yeah. I mean, very, very, very strong behavior in big tech still.
The dollar is interesting because, we've heard President Trump, we've heard Scott Bessent saying we want a strong dollar. But Scott Bessent also has acknowledged it doesn't have to be at 110, right? It doesn't have to be that strong. Where do you see the dollar going? Yeah,
you don't want the dollar to be at, so polarized where it's so weak, so strong. Somewhere in the middle is good. I think we've started to see DXY, with the chart you have there, pulling back a little. I would even like to see it go back towards 100, to be honest.
Really?
We're at 105, 106, 107. I think you'll start to see a lot more favorable moves in the market if the U.S. dollar pulls back towards 100, and I think commodities will love it too.
Yeah, multinationals for sure. Hey, earnings, I want to talk about earnings for a moment, right? Because earnings has been fantastic, but revisions have gone down a lot. And some people are worried about that. But this is for 2025. For 2026, revisions are going up. And I feel like Wall Street could have its cake and eat it too. Like, okay, we're not so sure anymore about the second and third quarter, but 2026, and this is a reason to sometimes hold stocks, right? If you think earnings are going to be great.
So here's the thing. And the same trend is happening with guidance. There's more companies guiding negative than guiding positive, but I think this is not necessarily a call from Wall Street or corporations saying, yeah, we're going to go into a recession, we're going downhill. I actually think there's pretty much a 0% chance of a recession this year from a GDP's perspective.
Right.
But I think what it more is that they're hedging. They're saying, yeah, this year we're not really sure what's happening, but as the volatility subsides, as we get more clarity on economic policy, then in 2026 we see more
growth is going to reignite.
Right.
TLT, you like bonds short. You think yields are going to go back up?
Absolutely.
Will we go to 5?
I think we go towards 5. I think 4.8 is our base call right now. 4.9 even.
4.8 takes TLT back at least.
Back to the lows. We see new lows, and let me tell you something. If you look at inflation, I'm very surprised that the dip in TLT was bought last week. If you look at the 1 month, 3 month, 6 month annualized inflation metrics, we're actually nearing 4 to 5% in some cases. So inflation is very hot, and rate cuts are on pause for at least until Q4 this year. I
got 30 seconds ago. I called you a couple of years ago the youngest gold bull, the gold bug I ever met in my life, right? You've been pounding the table on gold. You have been right. Everyone's calling it now the top Trump trade. What's intriguing is there's very little retail action in this. How much further can it go?
It can go a lot further. We're going to see 3,000 plus is our call, and we're going to probably raise that target soon. You're seeing physical gold demand. You're seeing gold demand in all forms. Just think about what happens when the U.S. dollar starts to pull back. This has been the strongest gold market from a relative basis in history, up 50%, while the U.S. dollar 10-year note are running higher. And honestly, volatility has also subsided, but you still see gold going higher in basically any market backdrop. And one last thing, gold and the S&P 500 had a 0.8 correlation coefficient in 2024. That means they move together 80% of the time. Gold is no longer just a safe haven trade. It's the risky trade and the safe haven trade at the same time. This is a golden setup for gold, no pun intended.
Hey, listen, we're going to do a Doge panel. Can you come back?
Yes, let's do it.
See you in a few.